Yeah, Wednesday. Good morning, everybody. Welcome to the Wednesday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys had a great day yesterday. We're going to take a look at our markets from an educational perspective, identifying both breakouts and reversals to look for potential trade ideas for today. Let's go ahead and dive in. S&P this morning, we're down 23 points. NASDAQ's down almost 100 points, so a little bit of bearishness coming into play. We were taking a look at some, potential breakout areas yesterday in the NASDAQ and the S&P, and really, markets didn't want to do anything yesterday. It was one of those things where we just kind of chopped sideways. Now, we did on the CPI numbers that actually came out of London. They actually had higher CPI than anticipated, and so we've sold off ever since the London opened this morning. The other thing to think about, kind of where we are right now, is if I look at a daily chart and throw our moving averages on there, we are bouncing off of the 200-day moving average. Remember, we've been below the 200-day moving average since all the way back in March. March 6th, we closed below it. Before that, it was probably January or so that we were hovering around it. But we're sitting right at that key resistance that exists at that 200-day moving average. And so a little bit of a pullback wouldn't necessarily be a bad thing. My belief and anticipation was that we were going to break out above here and continue to run a bit higher, but that did not occur. And so now we've pulled back a little bit. The next area of demand that makes some sense would be this area down in here off the smaller time frame chart. If I look at it, it's actually cleaner to see on the 15-minute chart. There's the origin of a really strong rally in price right through here. Now, as we're falling on a smaller time frame, if we come back up and retest this little area here, I actually think this makes for a pretty nice short for an intraday trading opportunity for today, up at 42.89. NASDAQ, similar picture. We broke out, but then it just kind of meh, right? So really not giving you anything from a trading perspective. Much smaller time frame. Again, go down to, say, a 15-minute. You've got a little wick over wick area here for a potential reversal. And you're essentially just riding the wave, right? You're saying, all right, well, I'm okay if we get a pullback for a couple of days or even a few, and we pull back into this region. Remember, our momentum has been slowing a little bit on the rally up, and so a pullback would actually not be a bad thing. Matter of fact, the reason it would be a good thing is because on our weekly chart, we already have a higher swing high. I do still need a higher swing low, and a higher swing low would require a couple of weeks of price dropping. So I'd like to see a higher swing high and a higher swing low to give me further confirmation of this bigger picture upward trend. Next would be crude oil. So looking at crude oil, we've dropped down below that breakout area at 88. Actually, I've been trading on, for those of you that are swing trading, I've been trading on the October contract, using kind of the October contract as my main tradable vehicle. You can see that we had our breakout level here. Stop never got hit. So came down and hit our target. So our next area and entry would be a breakdown below 85.35 or on a slightly smaller time frame. Don't really have a whole lot on this smaller time frame. And we do have crude oil inventories that can be pretty important going through. So I like this line here. I just don't like the time of day that this area was formed from a reversal standpoint. And we already came close to it once. I'm going to let it go. I think a breakout below 85.35 is probably the best way to go on that V22 contract. If you're looking for a swing trade, if you're just day trading it and you want to trade the month with the most volume. Couldn't get that brain out of my brain. The one with the most volume, you're going to trade the September contract, which is our front month contract, and it would be 85.71. And then we have gold, and gold is just hovering above a potential breakdown point there at 1786.50. So look for a breakdown below 1786.50. It's actually given us some lower highs as we drop down into that area. Looking very quickly at our euro, the euro, which we talked about on our live trade room Friday night, is still just very ho-hum. Not a whole lot going on here in the euro. The other one that we had spoken about, which we're getting closer to here, is the ZN, which is our 10-year note. For a potential breakdown, we are sitting right at the area where it would be a potential breakdown at this point. If that breakdown doesn't occur and we rally up, you can look for this area here for a potential retest. So, hope you guys have a great day. If you have any questions, shoot us an email, support@tradersarmy.com. Until tomorrow, guys, talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to TradersArmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.